So I actually like the call. So I'm going to disagree with at least most of the negative takes. Happy shareholder since August 2020 when they announced the Bitcoin plan. Um, so the funny thing is I didn't love the initial 21 plan um, because I didn't like the even equity and debt proposition. That, in my view, was more debt than I would have preferred, should they have issued it all. But I also pointed out in a tweet at the time that that's just an estimate because they can only issue as long as there's demand for it, especially the equity. And that's very easy to measure. If the premium's over NAV by a comfortable margin, it makes every sense in the world for them to issue more shares and buy more Bitcoin with it. And then the preferred, that's more of a complicated thing to measure, but basically bond market demand for it. And so when I went long MicroStrategy back when MicroStrategy, first they were buying Bitcoin, then they were issuing debt to buy Bitcoin. I was like, okay. Then when they were issuing like third and like second and third rounds to buy Bitcoin, I was like, is this getting a little bit much, maybe? But then when they started issuing equity to buy more Bitcoin, I was like, okay, that's actually de-risking it. That's improving like the asset stack compared to the debt levels at the cost of share dilution. So if you're, like Metaplanet in Japan makes sense. Uh, it's basically a free lunch in any sort of like currency market where there's not one of these to go make one if it's legal. Um, as far as multiple in the US doing it, there is a network effect advantage for being number one because you have way more liquidity. And like options markets are pretty challenging to get liquidity for because every single strike price and every single duration on the option is basically a different security. And so it's not just like one stock where there's a decent amount of liquidity. If you've got 20 different strike prices, based on 10 different durations of what that option is, that's 100 different option contracts, and it's hard to get all of them to be liquid on anything other than like the biggest one. That same thing happens with ETFs. So for example, if you're the top one or two in your ETF category, you're likely to have a liquid options market. Whereas if you're ETF number 5 in that category, your options market is going to look like a ghost town. So there's always going to be an advantage to the first mover, the largest, most liquid bear market. Other potential tail risks are hack risk. As far as I know, they diversify their custodians. I haven't kept up on all of their filings, so I don't know if that changed or if they moved that around. But I know historically they had 3 different custodians that they used. So forgive me if I'm not super up to date on what they're doing with that. And also tail risk of, it's a giant honeypot. If the U.S. government has a problem, they know where the Bitcoin is. Same thing for BlackRock. So Bitcoin IOUs are not the same as Bitcoin. So I think that I think they're doing the right strategy for them. Um, and I understand concerns that people have around concentration. But it's an open protocol. They're buying a lot. They said they're going to buy a lot. They are buying a lot. Others have had 16 years to stack. Um, they still should be stacking other people. So I always like to see more diversified Bitcoin holdings wherever possible. But basically, I would say the most reasonable risk is just debt terms relative to the market cycle, which so far they've navigated, but it's always a risk. I would point out that GBTC had more Bitcoin at their peak than MicroStrategy has now.
Oh.
So MicroStrategy has 500,000 and change, whatever the number is. Grayscale had comfortably over 600,000 at their peak before the ETF conversions allowed all the Bitcoin to drain and go to cheaper ETFs and places like that. And then if you go back really far, I mean, places like Mt. Gox, the percentage that were like trading on one exchange in the early days. So I would say people that are concerned here in 2025, I mean, if they weren't equally concerned in say early 2021, late 2020, just keep that in mind that there are these pockets of centralization that happened. Potentially a bigger issue is just how many coins are sitting at Coinbase because a lot of these entities all like use Coinbase for some or all of their of their custody. So you've I think like a couple million coins at Coinbase. Um, that's potentially a bigger issue. Ideally, you want ETFs to hold it at different custodians, like Fidelity's doing. They're holding their own coins rather than all just being like an overlay on top of Coinbase. I would like to see more diversification there. So I do think that there are valid concerns around centralization, but this is which people I think often forget or take for granted. So, for example, one of my banks is a Big Four bank that I use for international wire transfers and business banking and all that kind of boring stuff. And like all day today, they've had wires offline because of some technical vendor issue. So just can't send wires. Just money's just stuck in this little controlled pocket. Whereas Bitcoin's still putting out blocks, still working. There's always drama around it, but it's still working. And I think that people forget about that. And I would say that as far as this whole kind of corporate centralization thing, none of that impedes Bitcoin from working. It's not even at the current time raising fees. I mean, that one of the concerns, obviously, when 10x more people want to use Bitcoin, there could be fee pressure on the main chain, which could elevate smaller users to higher layers of the network, which has trade-offs. But at the current time, you have kind of the perfect world, which is that there are these big pools of capital buying it, and yet it's a permissionless network. Anyone's free to use it, larger than it is now, and you can't have like a single like FTX in the Bahamas blow up and then send the price around, affecting everyone's money. So part of the maturation process is that more entities buy it. That'll include small entities, big entities, potentially sovereign entities. Pretty much the whole stack is buying it. If it ends up being a global reserve asset and a global reserve money, it basically means everybody's going to own it in some way or another. Now, the path dependence still matters. The ideal, optimal, the utopian scenario is all the little people get in first, then the bigger people come in, and like nation states are last, right? You don't want like you don't want like Apple to come out and buy, and become the biggest Bitcoin holder after they've already kind of played the fiat game really well for 3 decades, right? But as a permissionless network, you can always choose who figures it out earlier. That's why a lot of us engage in education. I mean, most people here are they have platforms or they individually work with people to help people learn about Bitcoin, self custody Bitcoin, just relentless education to try to get out there and say, hey, because you could drive anywhere. You weren't relying on public transportation. You weren't relying on these other systems. You were basically just reliant on yourself at that point. Now, there's always nuances to that. You're reliant on being able to get gasoline, for example, which, in the 70s, people found out is not always a given. But it was a symbol of freedom. Um, and, over time, people, for example, there's some people that love to work on their cars. If something breaks, they can often fix it. They know how it works. They can change the oil. They can do all sorts of stuff with it. And then there are people that have absolutely no idea how their car works, can't change the oil, can't change a flat tire, can't do anything with it. And of course, the people that can do everything with the car are going to look at those people and say, you've given up your freedom. You can't even maintain your own vehicle. You're reliant on those around you to do it for you. But the point is, it's optionality. People can choose their own adventure for how they maintain their car. They could be fully hand-on, basically building it from the invention and deployment of the telegraph made it so that information can now go at the speed of light while settlements were still speed of gold and verification and auditing. And so and if you could do information at the speed of light, you can do transactions at the speed of light because transactions are just agreements to do something, IOUs basically. And so they opened up this gigantic mismatch between transaction speeds and settlement speeds. And the way to solve that was basically someone operates a ledger and reconciles them. And ledgers are prone to centralization and capture, so they coalesce into central banks. And we basically had a century and a half where humanity didn't know how to do fast settlement, and yet we had fast transactions, and that gave like a power dynamic shift to every country in the world. And Bitcoin is the invention of fast settlements. But then, much like the telegraph was invented in the 1830s, it wasn't deployed across the Atlantic Ocean until the 1860s. It wasn't deployed across the Pacific Ocean until the early 1900s. And then, of course, you build on top. There's radio. There's telephone. There's internet. More bandwidth involved in just taking monetary premiums away from things that ideally shouldn't be scarce. And almost all of that is positive.
Mm-hmm. Mm-hmm. I'm conscious of time here. I want to round out, but I want to throw one last thing towards each of you, and I'll give you a second to think it over. But in the next, we'll call it, we'll say 5 years. If you could see one incredibly positive thing happen on the Bitcoin front, what do you think that one thing would be? if you could pick anything to happen. For myself, it would probably lay somewhere in the realm of it being so stupidly easy for your average person to onboard and use Bitcoin in a fully self-sovereign way that the leap from
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.